Hello everyone, welcome to the September 2025 Banking and Financial Updates. This month has brought some special crucial changes in banking operations, risk management and compliance framework. Updates every banker and exam aspirant needs to know. From updated KYC and reporting guidelines to new operational risk control and compliance mandate, September has been a major month for the banking ecosystem. Let's dive straight into the most important policy shift, regulatory alert, and risk related updates you must not miss in the form of MCQ. In today's video, I try to cover all the changes that actually taken place in the month of September, especially in banking, operations, risk and compliances. This video is a complete MCQ based, that is having all the important things that definitely important for every banking and financial aspirants. Now, without wasting the time, just start our video. First thing is that what is the minimum capital adequacy ratio, that is CRAR, under Basel III norm in India? It is 9%, higher than Basel's 8% requirement for prudential safety. Now, next thing is what is the minimum common equity tier 1 CET1 ratio required? It is 5.5% core capital requirement for Indian banks. Now, next is total capital, including the capital conservation buffer, should be it is 11.5%, that is CET1 plus 81 plus tier 2 plus 2.5% of CCB. Now, next is that the leverage ratio is intended to prevent excessive leverage in bank balance sheet. That is minimum 3% for general banks and 4.5% for DSIBs. Now, next is that RBI promote corrective action, that is PCA, is triggered by breaches in CRAR, net NPA and leverage ratio. Now, next is that minimum period after which a loan become NPA. It is 90 days overdue, applied to interest or principal. Now, next is that SMA2 classification applies when overdue is, it is 61 to 90 days. Early warning signal before NPA tagging. Now, next is that standard assets provisioning for retail loan is, it is 0.40%, act as a general loss buffer. Then next is the maximum exposure to a single borrower non-group is, it is 20% of tier 1 capital, extendable to 25% for infrastructure per RBI large exposure framework. Now, next is that the priority sector lending, that is PSL target for domestic bank, it is 40% of ANBC, mandatory regulatory requirement. Then next is agricultural PSL sub target, it is 18% of ANBC, of which 8% for small and marginal farmers. Now, next is MSME PSL target micro enterprise, it is 7.5% of ANBC, boost small enterprise credit flow. Minimum capital to maintain investment fluctuation reserve, that is IFR, it is 2% of AFS plus HFT portfolio, built gradually to absorb MTM losses. Now, next is who approved bank OTS policy for small NPA? It is bank's board of directors. Now, next is operational risk arises from failed internal processes, people or system. It also includes fraud and cyber incidents. Then next is market risk includes risk of losses due to movement in interest rate effects or equity prices managed through VAR and ALM technique. Then risk-based internal audit cycle for high-risk branches, it is annual. Then next is who does the Chief Compliance Officer report to? CEO and Audit Committee of the Board. Then next is which framework governs AML KYC compliances? It is PMLA 2002 and RBI Master Direction on KYC 2016. Includes CTR and STR and record retention. Then STR must be filed within 7 days of detecting suspension filed with UI, FIU and IND. I hope I cover all the important things that is directly related with risk and operational and compliances in banking, and that wrap up the key operational risk and compliances updates for September. If these insights help you stay informed, make sure to like the video, drop your thoughts in comments, and subscribe for more monthly banking and compliances updates. Thanks for watching. Stay compliant, stay aware, and keep growing in your banking career. See you in the next update. Thanks you. Have a nice day.